Hi guys, so it's me, Nicolette Mashile, and I am happy to be back. I know I haven't been doing a lot of these videos, but it's because I've been dealing with some depressive moments in my life where I'm being bullied on social media, but it's all good. I got you guys, I got you covered. So today we're dealing with something that is very, very serious. It's a legal and a financial matter. So I'm asking all the legal eagles to be out and about and check this out and let me know where I need to be corrected, because obviously I'm not a legal person, but also I'm not a financial advisor. If you are looking for financial advice, please speak to somebody who is certified and registered with the FSCA. So it is very important that when you make a financial decision, you've got to also think about the future and what might happen in the future. Therefore, you need to find a way in which you protect yourself. We spoke a little bit earlier in the year about borrowing people money and how important it is that you make sure that you've got a written agreement. I hear this a lot in South Africa, and it happens quite a lot. It's happened to a very, very close person in my life, where they go into a financial decision and buy immovable property, or which could be land or even a property, an apartment. And unfortunately, life happens, and then they want to get out of the deal, and it's not as easy as just saying, I don't want this anymore, right? So many times people are in love and they want to do best for each other. So you might be the party that wants to buy a property. You go to the bank, you fill in the home loan application, and the bank comes back to say, listen, you really can't afford this loan, or we can't give you 100% loan. And most of the time, some of the banks will say to you, unless you can get someone else to sign with you, co-sign the loan with you, and it becomes a joint bond account, right? Many people do this. Some people believe that they're about to get married, so why not? It's a great financial step to take. Some people even do it in marriage, right? But specifically today, we're going to talk about those who sign joint bank accounts when they are not married yet. Because the law is a little bit more, it's not easier to get out of a joint bond account when you are married, but there is a lot of law that is behind you that can really help you. And one of probably the biggest things is the fact that the transfer, if it's a case of divorce or it's a case of a deceased partner, the transferring of that property is a little bit more smoother than when you are not married and you went into a joint bond account. Now, as I said, life happens, relationships end, or people fight. And even when people are fighting, you know, you might be the party that has been you might be the victim or the one who's been disgruntled in the party, in the fight, and you just want to let go and forget about this entire thing. But the reality is that you do have a financial obligation, because the company or the bank or the financial institution that gives you or grants you that home loan in a joint account or a joint bond account sees you guys as jointly liable. It doesn't matter who the payments are coming from, right? So both of you are going to be held liable, which means that it will pop up on both of your credit records. So if you apply for another credit application, you might find yourself in a situation where they're like, you already have another home loan, or you are overcommitted, or they don't think that you are able to afford this loan. So let's just start off speaking about this, because the other thing that happens is that you will ask somebody to sign a surety. So sometimes the bank says to you, we can see you can afford, but we're not really sure of your income. Can you give us someone or something to sign off a surety? For instance, I just got a second bond, and to get that second bond, because I'm a freelancer, the bank asked that my company becomes the surety on that home loan. Now, on the title deed, when I do finish this thing, the name that will be there is mine only. Why? Because my company only came on as a surety. So they become jointly liable, but they're not necessarily on the title deed, right? But when you get a bond together and you sign for a bond together, you are basically saying both of our names are going down on that title deed, right? Which also then means you are jointly liable for that bond. And the bank doesn't really care where the monthly installment comes from. They just want that minimum monthly installment every single month. So what happens a lot is that in a love relationship, one party, most of the time it's the men, they would pay for the monthly installment, and the woman maybe is responsible for other things around the house. It may be like taking care of the electricity bill, the furniture, buying of furniture, buying of grocery every single month. And it's important that if you are in a situation like that, you need to record those kind of things so that you've got evidence to say that, yes, you may not have been paying the monthly payment, but you did at some point also contribute to the running of the household. That is really, really important. And a lot of people tend to what's the word? Not avoid. What's the English word? I've ran out of English, but data bundles. They tend to kind of forego that kind of a thing. Also, what's important is that if you are going to be getting into a joint bond account with somebody, you need to make sure that you actually go to a lawyer and ask them to draft you guys an agreement of what happens if life does not go your way, right? You need to, guys. It's so important. You need to have a solution and a remedy. Do you sell? Do you buy the other party out? Or do you substitute the bondholder? So those are generally your options, right? The first one is you can sell. So what you do is you would need to both agree that you want to sell this property and find a way to whatever purchase or selling price that you actually get, you would need to pay your capital gains tax. You need to settle the bond, right? Sometimes you might find that there's a shortfall because a bond is a bond is a bond, right? But hopefully you got a good interest rate and you guys don't have a shortfall when you sell on the purchase price of the house, and you can settle that thing and you can both go your separate ways. It's gone, it's out of your hands, right? Sometimes the second option would be for you to buy the other person out. Now again, that buying the other person out is obviously removing their name from the bond, which means you want to remove them, number one, from the bond, number two, from the title deed. So ultimately, it will cost you a little bit more money to do that. But I'll explain again what removing somebody from a bond actually looks like, right? So the third option is you then, part of actually buying someone out is what we call substitution of bondholder. It's section 57 of some act. I can't remember what the act is. As I said, I am not a legal person, right? It is a bit of a confusing act because they speak about land, but you know, in South African law, because it's old law, land and immovable property, or you know, property that is immovable, cannot move it. You know, she's not a building, she can be moved. They always kind of interchangeably speak about land and property, right? So basically what you need to do is you would need to get the other party first and foremost into a room. Now, if you guys have had a fight, if someone has cheated, if somebody has just maybe has been an abusive lover, and you now need to get this person in a room to agree, or not even a room, but to agree to actually substitute you on the bond. In other words, remove you from the bond. It does become a little bit tricky because emotions are running high, right? The other reason could be they probably cannot afford the bond by themselves, because generally when you go into a joint bond account, well, there are situations when someone else is doing you a favor, but most of the time people who go into a joint bond account is because maybe individually they cannot get the bond, or they can't get a good interest rate, or because you guys want to get a far more a house maybe that is out of your individual affordability, so you guys go at it together, right? So basically the bank, what it will do is it will do a whole credit application of the person that wants to stay on the bond, or the person that is going to stay on the bond. So let's say, for instance, myself and my boyfriend get into this, we sign a joint bond account, and then we are 2 years down the line, we fight, and things are just not going well, and we decide to split. But now you have to pay for a bond. So, and most of the times what usually happens, because it's not a marriage, you can't go to court and say who gets the house. You know, it's usually the person that is the victim who always moves out. This breaks my heart all the time. And then the other party who probably broke the relationship is the one who ends up staying in the house, and they end up getting the benefit of staying in the house, even if maybe they've, you know, actualized in the next 2 years, and they can now afford the bond payment by themselves. Because remember, being able to afford the bond payment does not mean that you can get the bond yourself. Remember that is very important, because yes, your financial status may have changed a couple of years and you may be able to pay the installment, but if the bank redoes the credit application, you might still not be able to get the bond, and also not even at the same rates. So that's the other thing that needs to happen, is that whoever is staying in the house would be the one who wants to stay in the bond, and the bank will redo the entire credit application. So if, let's say, for instance, I'm the one who decides that I'm going to keep the house, I then have to agree to substitute my boyfriend from the bond and become the only person that's there, but I would need to go through that entire credit application and I would actually need to be approved. Sometimes a lot of the banks reject those kind of applications purely because, as I said, people don't go into these kind of structures because they want to. Sometimes they go into them because they financially need to, right? So a lot of banks don't like to take that risk, right? So that's the first thing. The second thing is that the house needs to be transferred. So the portion that the other party owns needs to be transferred just like you would have transferred if you were buying. So basically, there will be a transfer cost for the lawyers. There will be a transfer duty provided that the house obviously was the full purchase of the house is 900,000 Rand and above as from 2017 March. So if the house was bought before 2017 March, it will work on the 750. But if it was bought after 2017, it will be at the 900,000 Rand threshold, right? So so let's say for instance, half of it, that I own, if it's a 50-50, right? Half of the house that I own, let's say we bought the house at 1.2 million, the 600,000 Rand that I essentially own will then, I don't know if it's the actual purchase price or it's actually the value of the house. That I still need to get around. I'm not really sure. As I said, guys, if you know these kind of things, please do jump in. So basically, that's what would need to be calculated. Same thing with the transfer duty. That's the one, obviously, the 750 and the 900 threshold. But the transfer cost would also be calculated based on that cost, right? And then you've got to pay all the... and remember that all the levies and taxes and all those things need to be paid in advance. So things like the levies, the rates, you gotta pay them in advance, because what they do is they calculate how much and then split them by 2. Now, a lot of people don't ever have an agreement on this because, as I said in the beginning, sometimes the guy or the girl is the only one who's actually paying the bond, and maybe you are paying for something else in the house. Now, it becomes really tricky for you to now equate, especially if you had not been recording these kind of things. It becomes very tricky for you to equate how much did you actually contribute to this thing, right? So you might want someone to buy you out, but how do you equate it? How do you say fairly, whereas the person can just simply say, yeah, but I've been the one who's paying this bond. Basically, all I did was just use your affordability. So these are some of the things that you've got to think about, and think about them very carefully before you go into this thing. So even on the, I'm going to buy you out, or in a situation where you are removing the person from the bond, at the end of the day, the person has to be removed from the bond, right? So those are the kind of things that you've got to think about. I think the other situation that really makes this thing a little bit tricky is that you might find that there's a person who doesn't want to pay for the upkeep and their monthly installment, but still wants their name to be kept on the title deed. First of all, I think umoloi for that. I just want to put it out there. I want you to hold your heart and say, I am a witch, because you basically are, right? It gets even more tricky if you guys have children, right? Because ultimately that property, because both parents are on it, it belongs to, ultimately at the end of the day, it's going to end up belonging to your children. And it becomes such a mission now at the end, whose estate does it then get put under? You know, these are some of the things that we've got to think about when we make financial decisions. There's a quote about what will the math equation look like of what will be the consequence of the math equation that you get into today. So basically, the financial decision that you make today, what will be the financial consequence in the future for it? So you've got to think about those things. But on the other side, it could be that this person doesn't want you to get off the bond. They're not they don't participate, or they're not willing to actually help you get off the bond. Maybe you want to really get off the bond. You know, you're hoping to get something. Maybe he pays you out half, or you at least get the deposit that you might have paid, and this person is just not willing, or probably cannot afford it, sometimes. And now your name is there, and you can't get a new bond by yourself. You can't get a credit agreement, and it becomes very difficult. It makes your life so difficult. I always say, make sure that you do get everything in writing. So if somebody's unwilling, make sure that you at least have it in writing, so that when there's things like now you gotta pass this thing on to your children comes, you can prove that you actually tried and this person was unwilling. But I always say, get the help of an attorney, get the help of people that actually understand the law and understand this thing and how to apply Section 57 and how to apply for a court order to be able to get you off a bond that you no longer want to be part of and probably shouldn't be part of, especially if you don't want to, or the other person is really just giving you a very difficult space to be in. Unfortunately, it's life and it happens. So I would say really think about the step before you take a joint bond account. What does it mean also for your credit, your credit record? What will your credit report look like if you cannot get out of this thing? Because it will become a hindrance for you. Let's say you've moved on, and 3 years, 4 years down the line, you remember, oh my goodness, Gonja, I've got a joint bond account with this person, and maybe they've now defaulted. Sometimes you can't even find this person. It's hard to even find the person to sit down with them and be able to go through these kind of things and say, listen, we need to get out of this. So a legally drafted document that is an agreement as to what will happen if we end up having to split, or if somebody dies, because sometimes somebody passes away, while you guys are on a joint bond account, and then the family come making claims and saying, this is our child's house, because sometimes y'all don't tell your parents the truth when you sign joint bond accounts, and your family believes, ooh, you got a house in Johannesburg. You pass on, now your family is trekking there all the way from Maburking, from Tabaholo, then Bushbuckridge, or they're coming from Moleko, and they're coming to look for their child's house, and only to find out that you guys actually are on a joint bond account, and all of a sudden it becomes a little complicated because he probably or she probably didn't even write in their will who this thing needs to be transferred to. So you've got to have a legally drafted document, an agreement that you both co-sign over and above the actual joint bond account to say, if this happens, this is what is going to happen. Look, it's understandable why people get into joint bond accounts, but you've got to think about it because it's a very big financial decision. Also remembering buying property in general is a huge financial decision.